Okay guys, welcome back to the channel, and let me run you through this trade I took here on my MT5 using ICT strategy. So I will take you to the trading view, then take you on with the analysis. So as of Sunday, I did many analysis here on trading view. So I was only opportune to take this one. This one was Euro USD. It happened early during the Asian section after I did the analysis, but I'm looking for it. So the buys just happened so fast this morning, and before I could wake up, this one has passed. But I caught GBP USD, sorry, USD card. So let me just quickly explain the whole process of the analysis, then tell you how I was able to spot my entry. So on Sunday, as at the time I did this analysis, I was just left with this current price action. I think I'll play you the first part where I did the analysis so you can see where I was with. So this was what really happened. I came to this chart from the weekly time frame. Like I like doing my top down analysis to see where the price is headed at once. So on the weekly time frame, you can see that this level here is a very strong level of liquidity. This low here as my overall take profit, and you can see that this is a breakaway gap here. This is a breakaway gap here. From this spot here is a breakaway gap, so I'm not expecting price to feel it as at now. Then I went down to daily time frame also. Here on the daily time frame, you're also going to see some good confluences here too. Now on the daily time frame, this was what I saw. I saw a break of structure which was very visible, and in my breakaway gap zone, I have this to be a fair value gap which has been mitigated, which was also a good one to not be afraid of this level also. Then on the 4-hour time frame, this is what I had on the 4-hour time frame. I had this internal break of structure here on the 4-hour time frame. This was the first, or you can call it market structure shift after the sweep of this liquidity here. I have this first one to be a market structure shift. Then this was a retracement here, guys. This was a retracement. This was a retracement here around here, filling up this 4-hour FVG. This is an FVG, like this box is the FVG. So when I saw that price has mitigated this FVG, created a shift in market structure here, I was now looking for a possible point of interest where I will take it to the 1 hour, guys. So on the 1 hour now, you're going to see how I was able to mark out those points of interest here. Now on the 1 hour, you're going to see that this is a 1 hour order block. This is a shift in market structure. So as at the time I did the analysis, there was no confirmation. This was the low I wanted to see. Like after a retracement, you want to see price create a shift in market structure in line of the trend. That was why I had this to be my mini shift in market structure, not minding the fact that we already had this to be our first shift in market structure. So now on 1 hour, I have this to be a fair value gap, and it was already mitigated as at this time, because once, how do you know a zone is mitigated? If price trade inside that level, that means that level has been mitigated. So if you see the first three candles that form this fair value gap, and this other one traded inside of it, showing you signs that this fair value gap has been mitigated. So because of this case, I took a loss here. Because my stop loss was very tight, because I knew that after this mitigation, we don't want to see price coming to this level. Now let me also tell you why I started focusing around here, because of this shift in market structure. Before now, my main point of interest was this other block here, but since price did not really come back there, and I saw this mini shift in market structure, this MSS here, I now change my point of interest to this level here, focusing on that shift in market structure and the fair value gap here. Now inside of this fair value gap, there was one thing I did here. I'm going to show you how I entered that trade. There are other ways to enter a trade, because normally inside of this shift in fair value gap on the 1 hour, you go as low as 1 minute to look for another shift in market structure to start to confirm that we are now going bearish, because inside of the fair value gap you need a confirmation to enter. So we see on the 1 minute there was no good shift in market structure inside the fair value gap, but there's this manual where I do enter my trade when I'm in the fair value gap. Now on the 5 minutes I saw a fair value gap inside of the fair value gap. Like, let me explain to you how I was able to take that trade. So let me clear here. Let's say you have a point of interest here, which is a fair value gap, and this is a bearish market. Let's say you have a point of interest and here is a fair value gap. Now inside of this fair value gap, guys, how do you want to know that price is going to hold this fair value gap? Now this is a bearish fair value gap, right? Because this is like a bearish market. Now inside of this fair value gap, how do you know that price is going to respect this fair value gap? Is when you go to 2 time frames lower and you see a formation like a fair value gap. Now this is what you'll be seeing inside of your fair value gap area. This was what actually made me took that trade as at that time without even looking for more confirmation. Now inside of this fair value gap, you'll be seeing price create another fair value gap. So if price should create a fair value gap, it means that price want to mitigate that fair value gap and continue selling. So inside of your fair value gap, you'll be looking for a bearish fair value gap. Like if you're in a bullish fair value gap in a 1 hour time frame, you look for a bullish fair value gap when you get back to the fair value gap. I don't know if you're understanding. Like, this is what you would be looking for inside of this bearish fair value gap here. Another mini fair value gap to show you that price is moving. This is it here. Let me expand this chart. Now if you see, this is another fair value gap here. So as at the time I saw this bearish fair value gap, yeah, I quickly entered that trade knowing fully well that if price is going to mitigate, it's going to mitigate this bearish fair value gap and continue selling. So when I'm in a fair value gap zone, I look for another fair value gap inside of that level, so I can trade off from that fair value gap. So if there is no bearish fair value gap inside of my point of interest, which is a fair value gap, I would then know that yes, price is not actually going to hold on to that fair value gap, because price could easily come back to this fair value gap and do something like this. Let me just take it out. So price could easily trade to this fair value gap and come down and just pull out like that. So if there's no fair value gap around this little drop here, you just know that price is going to kick out from here. So that was what really happened in this trade. So as you can see now, the trade is going to be like a very long trade. I'm going to hold it for days because it's a good setup and I really believe in it so much. Yeah, so this is what it looks like here. This is what it looks like here. We've done about how many arrows? Let me check. This is about 9 arrows here. Although this might not be the exact entry I have on my MT5, or because I entered a little bit earlier than this on the trading view. Let me take it to the MT5. So like I said, I entered a little bit earlier. Now if you look at what I'm saying here on the 5 minutes, this was when I entered that market here. I wish I can see. So as at this fair value gap, you can see the entry there, and you see I'm risking $6 for that particular position. And if you check it out, $6, and this is about $88. That is probably 15 hour by now. So like I said, that one was actually smaller. So that is just it. I'm hoping to even hold this trade down to this level because yeah, for me there's nothing wrong with this market. This bullish fair value gap, I'm not even seeing it be an obstacle. This bullish fair value gap, I'm not seeing it being an obstacle to hold this market down. So this is what we are currently on as a profit here. Alright guys, welcome to the second part of this video on USD card. How I was able to get this particular trade entry is what I'll be telling you guys in this video. And for some reasons, yeah, this trade is on my trading view, while on my normal account, like a trading account, I could not get this trade because I did use limit order. Yes, I use limit order. It was not an instant execution because as at the time I took or analyzed this pair, price was yet to come to my point of interest. So I placed this trade using a limit order and I placed it wrongly. Like if you can see here on the chart, let me bring it back here on the chart. You can see the entry is at 1.37126. Let me show you my chart. So on my chart, it was actually supposed to be a sniper entry too, just like it is on that trading view, but I placed this limit order slightly above this level, and that was a mistake from my end because I was looking at something else. Yeah, so its entry supposed to be here, and by now I would have been in massive profit. So that's a mistake on my end. Nevertheless, I actually did analysis on USD CHF, which is like a correlating pairs. If you watch some of my videos, I do talk about correlating pairs. So USD CHF is a correlating pair with USD CAD. So I did analysis on that. So I was able to get an instant execution here other than USD CAD. So now let me go to the title of this video. The title of this video is gonna be candle range theory. How I was able to get a candle range theory entry on USD CAD. So I'll explain the whole concept of candle range theory, or I've already explained it. Just go to the playlist, you see where I have videos on candle range theory, like how you to be able to get that strategy or entry model. I've explained it on my playlist, so I'll be adding this one to the playlist also, and you just do it to watch. So right from time, let me take you back to my trading view on USD CAD. On USD CAD, if I should take you to the daily time frame, I've always known that USD CAD has been bearish. So this is it here. I don't know if you're seeing this very clearly, but if you see, there was a time I got an entry here around that level, and my target was this overall drawn liquidity, which is this low here, so that was my first target for price to take out that liquidity. This is from the daily time frame. So price came a long way and ignored the liquidity, and now this is what price did. It took out this other liquidity, which is going to bring us to the whole candle range theory explanation here. So it took out this other liquidity and is now dropping massively, affecting or targeting this liquidity. So like I said, the main aim of price is actually to trade from a particular point of liquidity to another point of liquidity. So this is price trading from the sell side liquidity to the buy side liquidity. So I called out, I gave out this analysis to my friend, although because of the fluctuation, you can see a little bit of fluctuation in this range here, like a little bit of fluctuation around here within these days. I could not really spot out a good entry. It was later on yesterday evening that price created this intermediates in this month I'm going to show you. That was when I got that spot as the entry. But when I shared the analysis, I just did the top down analysis and I shared the post. I just said find your entry, find sales. That was like what I gave out. Yeah, so let me start off with the top down analysis, linking it to the candle range theory. So candle range theory, let me just do a sketch for you. It's just a liquidity strategy. Candle range theory just like a liquidity strategy. All you want to do is want to see price take out the liquidity from a higher time frame. So the higher the time frame liquidity is being taken out from, the higher the probability of that trade. So imagine you have price on a consolidating area here, and price takes out all this liquidity. Okay, let me do something like this. So imagine price from a consolidating area, and price come back and take out liquidity from a very long time. Let's just say this is a daily candle and this is a swing high, and you have price consolidating in this area, and price come back to take out liquidity from a very long or from a very significant high that have not been traded into for a very long time. You expect to see price move in that other direction. And now looking at this, you know that right from time on the overall time frame, this market is actually bearish or has been bearish. So imagine having a bearish market and liquidity is being taken from an intermediate high like this. This is going to be like a high probability trade setup because you're trading in terms, you're trading alongside the the trend. You also have liquidity from a very higher time frame, and you also have a good target also as a liquidity, which could be something that would be very good. The target could just be the next drawn liquidity, just like I did here, like I targeted here. So the next drawn liquidity is your main target, just here. After price took out that first liquidity, you just want to see price, do the same to the other one. Now look at this schematic diagram. Let me show you how it is on this chart here. Now if you look at, just focus on this chart. This is the weekly time frame where I did my top down analysis from the weekly time frame. You can see that this is like this is an inefficiency that price filled before going down. After that we have this as a break of structure, like this is a good break of structure to the downside, and price created this imbalance, that's inefficiency here in price delivery, fair value gap here, and the mitigation happened. No matter, even if it did not get to the 50%, before now I always wait for price to mitigate a particular level up to 50% before I can take a trade. But for some reason I believe that mitigations would always come in. Even the slightest act of mitigating a particular point of interest is enough for price to take off from that level. Most times price will come back to mitigate that zone fully. Look at here, this is a fair value gap on the weekly time frame, and this mitigation price did it over 70%. Like you can see how price fully mitigated this area of interest. And if you're looking at this other one here, you will see that price tried to mitigate this level also. Let me just digress a little bit to another trade I took on BTC using the same top down analysis, and how I was able to exit because of I understood what mitigation is. So that trade I took it, or I did take that trade, I think day before yesterday. I'm not trying to chip in the video, I'm just trying to show you the whole act of price mitigating a particular point of interest with the slightest weak. So let me show you that particular chart. So this is BTC USD, and I was actually counter trading because I know that BTC, this is from the weekly time frame. I was actually counter trading because I know that BTC, the last structure on the weekly time frame was a break of structure here, and I know that BTC is fully bearish, like overall bearish. So I was actually counter trading a little. If I should show you on the daily time frame. Now on the daily time frame I was counter trading, and you can see my point of interest from the daily time frame was on the weekly time frame. I was counter trading to this fair value gap here. I was counter trading to this fair value gap here on the weekly time frame. I just wanted to counter trade to this fair value gap, see price mitigate this fair value gap, and you can see what price did here. It just traded with that momentum into the gap, and it returned with the same momentum. If not that the week has ended, or we still have Sunday and Saturday because crypto trade throughout the weekend, I might still be expecting price to turn bearish with this candlestick. So that's just the power of understanding a particular point of interest being mitigated. So let me show you. I counter traded from somewhere around here into this point of interest. Normally I would have had my take profit to be somewhere around here, like the edge of like this top where the fair value gap starts from. That was where my first take profit is. But I noticed something. There's something I always do when I'm counter trading. I'm always very vigilant because you're actually opposing the trend and you have all the forces against you. You can see the momentum of the bearish candle, and everything is just against you. Look at here now. The same thing happened over here. Price came back to this fair value gap. It's still the same act of counter trading. Price came back to this fair value gap. mitigated it and it went back. This other one, price used this fair value gap, it could not even reach this other one because of the energy, this the bearish energy. Price came back, used this one, and is actually going to continue. Now the next target is price getting to this low. Sorry, I've digressed to BTC. So this is it. Let me just show you the counter, like the trade setup, what it looked like, and why I entered BTC USD before we go back to USD CHF. Sorry, but all the same, we are still learning. Now this is it here. Just like I said, the slightest week is enough for mitigation. So this is one of like my A plus set of trade. This is a 1 hour order block here. This is the 1 hour order block here. Price did not mitigate the 1 hour order block. Instead, it mitigated this fair value gap. This fair value gap. Some people might want to call this a mitigation block here. It depends on what you see. It depends on what you want to call it. You can call that a mitigation block, but me, I just use the fair value gap as my point of interest. The mitigation block could be too many. It's still situated at one particular area. It's still situated, everything is situated at one particular area, so I still see that as a good point of interest. That level is a good point of interest. And you see on the 1 hour we have this visible sweep of liquidity. After the sweep of liquidity, we have a massive shift in market structure here. This MSS here, like price breaking that high, was a shift in market structure. And we also have a fair value gap. I was expecting price to fill, although it was a breakaway gap. You see, I was expecting price to fill this gap and it could not fill it here. So I entered this trade, and yeah, this trade did 5R, like 5R. This was where I exited the market from, inside the weekly point of interest. That was where I did take my profit, inside this weekly point of interest. So I got 4R here, and that's a decent one. But now, if I was still interested in the overall trend, which would have been more profitable, or I would have just come back to this point of interest, looked for a swift shift in market structure, just like I did here. I would have just come back, take this one as my market structure shift here. Let me show you how I would have traded this guy if I was still interested. Take this one as my market structure shift here, and what do you see next? This fair value gap. This fair value gap on the 15 minutes would have been my point of entry. So imagine entering here, and maybe I would have been stopped out a little, but I know that if I'm the one trading this market, I know how I do for my stop loss. I would have entered here, and my stop loss would have been above this high would be too tight. Above this swing point would be too tight, so my stop loss would have been somewhere around here. So this would have been my entry on BTC USD sales today or yesterday if I've taken it, and I'm 100% sure that this was gonna be my entry, and this is already 7R on this particular market. And where will I target? I told you my overall target is gonna be maybe somewhere around here, this low or this low, or I'll just maybe try to do 10R or stuff like that on this particular pair. So that is it for BTC here. This is just teaching you the importance of knowing your area of context, how to live on time, and confirmations you need to take trades. So let's go back to USD CHF, or sorry, BTC, sorry, USD card. Pause. So USD card, like I said, I stopped at the daily time frame. So on the daily time frame, after I got the whole idea of this CRT entry model, you can see it happening just like I explained here. You can see this is price mitigating this weekly time frame fair value gap, and it took out a very long term high, a swing point here. You can see where I have this it's like, let me just try to show you with something. This is a very long term high that has not been taken out for a very long time, and for me, I know that anytime price sweeps a liquidity like this, there's always a drop. So when I saw price took out this liquidity, I was very happy. And on the weekly time frame, price was actually mitigating this fair value gap here. So it was a win-win for me, feeling an inefficiency a little bit, taking out liquidities. So it kind of completed my checklist. So that was why I traded this. And at the same time, I went to like the 1 hour time frame. When I first saw this chart, I was not so pleased with it, like I said, because of the consolidation I noticed. So I had to wait for a proper, structure. Because at first, when I saw this MSS, I made price before this break of structure. Yeah, I'm telling you, I made price before this break of structure. So I saw price filled up this imbalance, but for some reason I did not like the whole act. Yeah, I did not like this structure. Yeah, I'm not seeing enough momentum to push price down. If I want to sell, I want to be in a market that is moving with momentum, just like this year. So if I want to sell, I would not want to be stuck up with a consolidating market like this. So I just waited for price, to like break this low. This low, I was waiting for a break here in this low, so before I could sell. Now looking at this chart, everything around here looked like a consolidating market, which means when a market is consolidating, it means that price is actually trying to build something. Build what? Inducement. So I noticed that before we can move further, price would have to take out this liquidity, because there will be no reason price could easily move from this fair value gap here. Yeah, because fair value gap is also like a form of liquidity inefficiency. Price could easily move from this fair value gap here that I'm drawing now. Price could easily move from that place. Now just do the same thing, but if price is not moving from here down to my next liquidity, that means there's another liquidity around this context area or the point of interest that it still wants to take out. That was what made me notice that, okay, this is going to be a possible inducement here that is actually attracting price. At first, when I saw the retracement with this whole momentum around here, I was a little bit skeptical. That was why I went to do more analysis on the correlating pairs also. So this retracement here was just giving me another thing entirely. So that was why I then placed my limit order, and I went to USD CHF to also check out the same structure. So let me show you USD CHF. I said USD CHF is a correlating pair with this guy USD AD, that's USD card. Now I don't think I've used a lot of time doing talking. Yeah, now on USD CHF I had this to also be an inducement here, but I just entered risking down to this above this stop loss here, that's above this inefficiency here. You can see how small this fair value gap is here. If you're looking at the fair value gap, let me just draw it. So that's the fair value gap. This high, which is a swing high here, where I have to do my inducement. Let me draw it. Just like USD card, I had here to be swing high. I had an inducement around here, so I was seeing the same structure. So I liked what I saw. This one already mitigated, like took out this high when I was online. Currently for USD card I wasn't online, that was why I missed that trade. So this one took out this inducement while I was online, so I entered manually. But for USD card, before I would go back to check, price has already gone further. That was why I did not take the trade on USD card. So that's just it here. CRT entry model is a very high probability trade entry model, like 10. If you're taking that trade like 10 times, mostly 70% of the trades you take using CRT entry model are going to play out. So I just like the way I was able to navigate through this whole point here, like the patience and everything. It's just so painful that I'm not in this trade. It would have been very, very good. So this was the first trade I took here, and I was targeting this low, but you can see the swift turn. but I'm very sure that this one is going to come back for this liquidity here, because that is the only liquidity prices looking out for. So that's just what I just wanted to share with you guys. And I think I've taken a lot of time. It's almost 30 minutes. So it seems like USDCHF has a longer way to go than USD card. As you can see, this is just how many arrow here? About 4 arrow. It's more than that. It's more than that. I don't know how this calculation is. Let me show you on my chart here. Okay, this is USD card. Wow, this trade looks so nice, and it's almost approaching TP. So USD CHF is more than that amount here. USD CHF, see, it was just at the top of that fair value gap I risked to. So that's $10 on the line, and this is about $60. So this is already 6R, and my targeted profit is 20R. It's really outrageous, but I just believe that since on the weekly time frame we are bearish, then there is no other thing that should really hold price again. So that's just it. The same thing I'm looking out for with this thing here, BTC USD. Since we are bearish here, then there's no other thing that should hold it until it gets to its target here. So the market is really bearish this period, and yeah, if you know what you're doing, then you're going to scale through. So this is it here. This was where I exited that trade from. I did not just want to believe that he had any other plans. I just left the market. So that will be all for today. Thank you for watching, and do well to share the video, subscribe, and yeah, comment if you have any questions.